Welcome back to another video. My name is Adam, and today we're going to be going over the bull and bear thesis of Palantir, whether or not I will be buying Palantir, and at what price, if I'm not buying, I will be wanting to buy this stock at. So this is a big data analytics company, also known as software as a service, and this has been high-flying stock, especially since it's been pumped up by retail investors such as the infamous Wall Street bets, and the 52-week high was $45. And this has been on my radar since it's significantly below that, at about a 50% discount to its 52-week high at $22.60. So we're going to go over both the bull and the bear thesis, and again at what price I like Palantir at, as well as some technical analysis of Palantir. So first, let's look at the revenue growth. Okay, so in 2018 we can see the annual revenue was 595 million, and they lost about the same amount at 580 million. So they grew that to 742 million, and finally in 2020 they earned 1 billion. So this is pretty impressive growth over the span of 2 years. They also lost a lot of money in 2020 because they're expanding so rapidly. A lot of startups expand a lot of money and invest in growth. So if we look at their growth projections, so they're going to be growing by about 35% this year, at least that's what analysts project, and by about 31% in 2022. Okay, and that's revenue growth year over year, and that is very impressive. When you have double-digit growth like that, sometimes it warrants the stocks trading at pretty premium multiples. Okay, and another piece of bullish news is that ARK invests, one of their ETFs bought 783,500 shares, and that represents 1% of their ETF. Despite their massive growth, let's talk about the bear thesis. So again, they're talking about the meme stock madness produced by, of course, groups like Wall Street Bets, and is saying that that has dissipated. The stock sold off in line with other tech names, but late last month, going into this month. And also what happens when interest rates are rising, which a lot of countries are starting to raise their interest rates. What happens is that generally over tech stocks that have premium valuations tend to sell off. That decreases how good future earnings look, okay, if interest rates are high. So the stock sold off in line with other tech names late last month going into this month. But even after falling from the stunning high of $45 per share to around $23 per share, has plenty of room to fall lower than here. And this was written on March 24th, so 3 days ago. And again, their main concern is valuations. So they admit that the growth of the stock is projected to be 30% per year in 2021 and 2022. But again, they're saying that it's not enough to factor in the current valuation. So they compare it to a company like Cloudera, although they do state that it's not apples to apples because Palantir is growing so fast. And so Cloudera trades for a sales multiple of 3.74, but again, they're comparing a company that's 28.3 sales multiple to 3.74. So again, you do have to look at the growth of Palantir compared to other software as a service companies. And they also talk that it's not a purely software as a service pure play, which is to me a good thing because it looks like they're diversifying and they have multiple streams of revenue. And they talk about insider selling. So of course, since they went public in just the weekend in February 26, insider selling hit nearly $112 million. So co-founder unloaded 53.6 million shares, operating officer unloaded 21.5 million shares. But again, that to me is not necessarily a bad thing because across many companies, insider selling tends to be high. That doesn't mean that they don't believe in the company. That just means that they potentially want to diversify their wealth. They want to buy themselves, I don't know, a yacht, a mansion. And so the stock's big slide could be a combination of not only insider selling, but of course, tech sell-off in general due to rising bond yields, rising interest rates. But this article recommends to stay away from Palantir, and this other article is saying that this stock, although short-term it may be still overvalued, long-term it is a pretty good buy. Again, Palantir has a long-tail revenue model, meaning that contract wins will start small and get bigger over time. Supply agreements with the government agencies, the health sector, and manufacturers are examples of recent wins. And if we actually look at this, let's look at, for example, I just searched up Palantir contract with the government. So they have 150 million contract with new government contracts with Denver's Palantir. And Peter Thiel's Palantir wins 823 million government contracts. So they have contract with the Army. They have government contract with the Federal Drug Administration. So there's a lot of contracts that are awarded to Palantir, and to me, that's a good thing, because especially if the government trusts them and they're a good technology company, then they'll just win bigger and bigger contracts, not only from the governments, but also from other manufacturers and producers. Okay. And so the revenue will grow slowly over time as customers validate the returns on investment in Palantir's Gotham, Foundry, and Apollo products. That's also a pretty good thing to point out as well. So oftentimes what happens with software as a service companies is a lot of high upfront costs, but then the revenues recur, and it's a high margin type company. So basically what that means is that for every dollar of revenue they get, a lot of that goes to the bottom line. So for every, let's say, dollar they keep, generally in software as a service company, about 79%, so 79 cents of that dollar would go straight to the bottom line, so straight to net income, which is pretty good. So again, they talk about the Palantir stock price target, and if you want, you can go over that. I'll leave a link to these articles down below in the description. And let's look at, of course, Palantir's Gotham, Foundry, and Apollo products. So their Gotham product basically starts with data from multiple sources and from organizations, let's say, from experimental procedures, for example, from the Roni vaccine and how effective is it in curbing the virus, for example. So they start with data from multiple sources, and then they fuse the data into a human-centric model. Okay, so it integrates and transforms data regardless of the type or volume into a single coherent data asset. And again, we're going towards a world in which big data thrives and lives, okay, because we have so much data collected around all our lives, and we need to make sense of all of this for example, for targeted advertising, for example. That's one use of it, or for curbing the spread of a virus, which of course we're very familiar with. And so it also tags, secures, and tracks all the data, and then brings the data to life for human-driven analysis. So again, this is pretty cool. So that's just their Gotham product. Their Foundry product is a platform that reimagines how people use data by removing the barriers between back-end data management and front-end data analysis. So it enables users with varying technical ability and deep subject matter expertise to work meaningfully with data. Okay, so think of scientists, think of research, think of experts in the field, think of even governmental organizations like the Army, looking to, of course, make decisions based on data-driven solutions, right? And so their Apollo is their basically where they have their Foundry and their Gotham product all in one as a software as a service place. So it's the continuous delivery software that powers our SaaS platforms, Foundry and Gotham, into the public cloud and beyond. So again, a very, very good company, and incredibly, this is what the world is going towards, right? This is what I believe in. However, I do think that the stock is quite high, and I think it could go lower, okay? Especially since if we're looking at the technical charts, we'll just give this a quick look. So what technical analysts call this like a head and shoulder pattern. So here we can see the shoulder here. So initial rise followed by a bit of a sell-off, given by another rise. So this is the shoulders here. And then here is the head, and then again there's another sell-off followed by a bit of a rise, so that's the other shoulder here, and then now going back down, and who knows how long this could continue. I'm just pointing an arrow, and that's generally signifying a downward trend. Okay, and if we're looking, of course, at the MACD and RSI is on the bottom, it's at 39. So I mean, it's not like it's moving into oversold territory just yet. It's nearing that oversold territory, but hasn't really hit it just yet. So I would be careful when buying the stock. And the MACD looks a little bit uncertain. It looks like it's generally converging downwards. That's the black line, and the signal is in the orange line. So I would wait maybe a little bit before starting to accumulate shares en masse. One, because of course, this head and shoulders pattern, and two, of course, because of the technicals of the MACD and RSI. Okay, so where do I think Palantir is going? If it moves close to $20, I'll definitely be buying some shares. Okay, that's just a given. If it moves below $20, I'll be heavily inputting shares in Palantir. So that being said, if you want to check out, of course, some Discord where I talk about, for example, the latest happenings with the Suez Canal and how to trade and profit from that, and exactly what I'm doing to buy and sell, you can check out links to the Discord below, for example, and we can set you up from there. So please be sure to give this video a like and subscribe, and I'll see you in the next.